Hello traders, today is 7th of April. My name is Alfred Hornsey, market analyst for YouTrading, and today I want to talk about the basics of technical analysis. Okay, the first thing I want to say is technical analysis for me is a time mechanism. It's not how I sort of generate the ideas on a daily basis. For that, I go to YouTrading.com for its heat map to see the relative flows. Today, we can see that the bottom left-hand corner is red, top right-hand corner is green. So for me, it's a risk-off day today where we look for selling in commodity pairs, commodities, equities, and things like that, especially in the London session. It could all change come the US session, especially if we get economic data out. If we look at the economic calendar, we can see that there's some unemployment claims which might, change the sort of sentiment. There's FOMC members speaking. There's Treasury Secretary Yellen speaking. So these guys can move the markets themselves, but because it's not necessarily a tier one data move, we should sort of be aware of it, but not put too much emphasis on that. We just need to wait for them to sort of stop talking, really. Like going back to the active trader platform, looking to the left-hand side, I like to use the sentiment indicator. Anything over 60% starts to get my attention. So New Zealand dollar versus US dollar, as we're looking at the chart, 66% of traders are looking to go long, 34% are trying to go short. The more the trade gets crowded, so above 60%, into the 80s and 90s, then that's when I look to see them get squeezed. So if we look to the pound versus the yen, dollar versus the yen, euro versus the yen, they're all above 80, well, around 80% or more. So 78% of traders trying to go short pound yen. We're looking to go long. Dollar yen, 90% are trying to go short dollar yen. So they're going to get squeezed out of that position. It's going to go higher. Euro yen, exactly the same sort of thing. 86% are trying to go short. So they're going to get squeezed out as well. So generally 80% of traders are wrong. So if you get a big number on the sentiment indicator, that's a great reason to go against them. But 66% New Zealand dollar versus US dollar, that's a good number to go against. People get worried when they sort of see the trade going against them. What I do like to see is lower lows, lower highs on a daily chart. So here we have a spike high up in through the 0.7. So that's a big figure, psychological level. So that indicates to me that some traders were attempting to get that figure and then sold off. There's either more sellers up there, but based on this green candle here from previously, you can see that these buyers were the last of the buyers for this big sell-off. So maybe they just flipped. They've got out of their position and they flipped. Like I said, when we sort of see a daily chart making lower lows and lower highs, today we've taken out a previous day's low and we found we found resistance at this low from the 4th of April. So that's another ideal situation. So today's candle has tested that low and it's broken the low of yesterday. So for me, this is trending lower. So going down to an hourly, we're looking for shorts. So we're looking to see what actually happened. So we had a bit of a break up here. So we had a break higher on this candle, double top, liquidity above there. Liquidity got stopped out, came back down, found support from this area here. So just going to box that off. So we know that there was buyers there before. This red candle is the lowest low, so lowest close. So again, support could come in on here, and that's kind of where we're at right now. So if we were to look left, we had this indecision candle here from FOMC last night that had a relatively equal low to the 1st of April. We've swept the liquidity there. So the next set of liquidity, if you like, is these guys here. So if we were to put a target underneath there, like a horizontal line, then that's our first target, 0.6875. And then if we look to the left again on this chart, we can see that there's another set of relatively equal lows. So we could easily push through this liquidity, go and grab the liquidity underneath there. Whenever you see relatively equal lows or highs, people have put their stops there because they think it's solid. And that's where when the sentiment's going against you, that's where your stop is and that's where you're willing to get out. You just have to think about where you put your stop. You want to put it under a swing low or above a swing high. So that's what these guys have done. That's what we're targeting. All right, next we look for other reasons for support to come in. So that can come off a daily high, if you like. So if we go to a daily chart again, looking through here, this candle didn't get tested. So that is major. So I'm going to actually start making these fatter. This one hasn't been tested. So again, a nice big fat one. All the other highs have been tested. So when we're coming down, the 0.68437 is going to be the first major support. And then we've got this swing low here. We had a drop base rally. So this test here, 0.679, around 0.68 really. That's the ultimate target, I guess. So once we take out the liquidity under these lows, they're the sort of real targets. So going down to a 15-minute chart now. Now I struggle to find a decent indicator, if you like, to follow. So it all has to be on price action. So we're looking for reasons to get short. Now, we just had a test of this swing high here. So I'm going to make that red. And we can see that we're making lower lows. Now, if we were to take a short now, we could get a reversal here of this high. And we can see here that there's relatively equal lows there. So for me, if I got short up here, then at least I could put my stop above here, and then I'd have like a 1-to-1 maybe risk to reward ratio to get down to this level. But the best sort of trades are when you don't have sort of congestion straight away. You need a bit of a run, so you need like a risk to reward of 1-to-2. So for me, I would probably more likely wait for this high to this low to this, and then wait for that liquidity under these double bottoms here to get taken, a retest. So we have like a breakdown, a retest, and then a continuation lower. We should obviously accelerate through these two levels because we said there was double bottoms, liquidity under their stops, and then come down to this major daily support. So that's how I look at using technical analysis. It's a timing mechanism, trying to go with the flows and against the sentiment of retail traders. Obviously, if there was fundamental news coming that would change the dynamic of the US dollar or the New Zealand dollar, then I would also wait for that to pass, just to make sure that the wider, more informed market are on my side too. Okay, I hope that makes sense. Any questions, just leave them in the comments below, and then I'll try and answer them in further videos. And yeah, I'll speak to you again tomorrow.